Mela, I am going to finish off this example over here. We did up to F, and we are going to start with G. Now, G says that a tenant has been leasing office space on the premises since March 2022. She has paid the rent until April 2024. Note that the monthly amount was reduced by 13,500 with effect from 1 January 2024. Key dates here are the beginning of the year, the end of the financial year, the 1st of January, and we need to include 2 months outside the financial year, which is March 2024 as well as April 2024. Those are the key dates that you need to put in your number line. Please note that when there's a change or increase or decrease in rate, it's very important for you to draw your number line, which is basically your financial year. Starts on the 1st of March 2023. This person has been renting for 2 years now because they started renting from last year, the beginning of last year, which was March 2022. And the change happened in January where rent increased and 2 months will fall outside the financial year. We only care about what falls within the current financial year. Please note that our rent was X for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 for 10 months. So it will be 10x. And then after 10 months, it decreased by 13,500. So it was X minus 13,500 for January, February, March, April, which is 1, 2, 3, 4. So it was X minus 13,000 for 4 months, which will give you total rent income, which is in the trial balance. And your rent income, according to the trial balance, is 1,836,000. It is 1,836,000. What I'm going to do now is to go to my workings and equate everything to 1,836,000. By now, if you have watched all the videos that I've done, you will know how to do this. You break the bracket, you multiply 4 with x, multiply 4 with 13,500, and this is what you will get. It will be equal to 1,836,000. Now, 10 plus 4 gives you 14x, and then transpose 54, take it to the other side. Let's see how much that will give us. One eight 36 plus 54,000. It gives me 1,890,000. I'm going to take that 1,890,000 and divide it by 14. Let's see what we get. Divided by 14, it'll give us 1,300,000. Well, it's 135,000. Sorry for that. And from that, I am going to subtract it by 13,000 because I want the decreased amount, which is 121,000. So for March and April, our rent was 131,000, 121,500. Because we have 2 months that fall outside the financial year, I'm going to take that 121,500 and multiply it by 2. I will get 243,000. And that'll be rent for March and April. And that rent for March and April, I need to subtract it from my rent income. And when I reduce income, it decreases your asset or creates a liability. Here, because I am reducing income, it will create a liability, which is income received in advance. A decrease in income results in a creation of a liability or a decrease of an asset. That is why here, when I record this, I am simply going to reduce rent income with those 2 months that fall outside the financial year. And that will be 243,000. And my rental income will be 1,593,000, which is what I've earned in the current reporting period, financial reporting period, or the financial year. The 243,000 will be recorded in trade and other payables as income received in advance. It is a liability. H. Future who owes Drake Limited 5,000 has been declared insolvent. Drake Limited received 35 cents from the estate of Future, and this amount was recorded in the cash receipts journal, right off the outstanding balance. That 5,000 it is what Future owes. 35 cents of it has already been received. We have not received 65 cents at all. As part of my workings, all I know is this. Future owes us 5,000. Future paid us 35 cents, which is 1,750. Meaning that Future did not pay us 65 cents. For every R1, we only received that Future owes, we only received 35 cents. So when you take R1 minus 35 cents, it will give you 65 cents. That means 65 cents was not received and will never be received. I don't like using never, but it will never be received with respect to recognizing this person as a debtor. If they decide to come back later on and pay us, we're going to record it as bad debts recovered. We debit bank, we credit bad debts recovered. But for as long as this person is recognized as a debtor, it ends now. There will never be a debtor again until they do what is good and they pay us, and then we go through the whole process of recognizing them as debtors again. That 3,250, we will never receive it. It is what we call bad debts. That amount must be written off. We are going to add it to bad debts in our under our operating expenses. And we also have to reduce our debtors control as we don't recognize this person as a debtor anymore. We are writing them off. A lot of businesses, though, they when they supposed to write off a debtor, they don't because it overstates their assets, and that's a good thing. It makes their statement of financial position look good. But that is corruption. It is wrong. And I still don't understand why external auditors or auditing firms don't detect that on time, unless they're also getting bribes or something. So what we have to do here is to go to bad debts. And when I get to bad debts, I am going to add that 3,250 to get my total bad debts to 12,220. At the same time, that 3,250, I am going to subtract it from my debtors control in trade and receivables. There we go. All right. J, debtors with credit balances totaling 11,000 must be transferred to creditors ledger. A debtor can't have a credit balance because it just defeats the purpose of what an asset is. And here it is us that will have to pay out, not receive. Because it's negative, it means we owe the debtor. Now, that means already our debtors control has been reduced by 11,000, and that was wrong. So we need to go to the debtors control and add it back because we can't have a debtor that has a negative balance. I am going to add back the 11,000. At the same time, I am going to go to creditors control and add that 11,000 rand because it wasn't supposed to be in debtors control. It wasn't supposed to have been subtracted from debtors control. It was supposed to have been added to creditors control, which is trade creditors, because it means we owe the debtor. The debtor has turned from being an asset or a debtor to being a creditor, a liability. Probably they overpaid us. You got it? Good. So our creditors control will be 439,000. Okay. 33,700 received from a debtor whose account was previously written off as recoverable was posted in error to the debtor's control. This must be corrected. I will start by firstly correcting the error. We received it. So when we received this money from a debtor who was previously written off, we deducted it from debtor's control. And we just wrote off a debtor right now. It was future. You realize that we took whatever future was owing from the debtor's control. But now when future comes back to us and pays us, and then we go to debtor's control and subtract it, what are you subtracting? In the debtor's control, there's nothing that is owed by future. It was taken out when we wrote off future. Now, when they come back, in this case, it's not future, obviously. This person was previously written off, meaning that whatever they owed us, it was deducted from debtor's control. In the debtor's control, with respect to that debtor, there is nothing. It was taken off when we recorded it as bad debts. When they come back and pay us, if we go to debtor's control and subtract it again, it is wrong because it's not there. It was not there in the first place. We wrote this person off. When we write a person off, it means that they owe us nothing. It's zero. So when you go and subtract 33,700, it's like you're having negative 33,700 because what they owe us is no longer there. It was written off. It was subtracted when this person became bad. What we need to do is to correct that because we're not supposed to have subtracted it. We're supposed to not even record it in the debtors control. We were supposed to just debit bank and credit bad debts recovered. But instead, we debited bank and credited debtors control, which is totally wrong. So to correct it, I'm going to debit the bank part. It's correct. Please check the general journal because we did this in the general journal. Okay. The bank part is correct. The incorrect part is crediting debtors control. To correct it, we're going to debit debtors control by adding 33,700. And then crediting the correct amount, which is bad debts recovered. Bad debts recovered is income. Do you see the mismatch there? You reduced your asset instead of increasing income, and that was wrong. So we're going to increase income and increase our assets to offset the reduced amount. And when we go to bad debts recovered, we already have 3,620. I am simply going to add 33,700 to get my total bad debts recovered of 37,320. Right on Kate says the provision for bad debts must then be adjusted to 6% of the test control. When I do this, I normally do it right in trade and other receivables in the debtors control row. I will firstly find the total of debtors control, which is 2,781,150. Take that and multiply it by 6%. And whatever I get, I will subtract it from my debtors control, which is 1,166,869. And once I get this, I will just find my net trade debtors. Note that the provision for bad debts that we put in trade and other receivables, it is the one that is calculated or the one that is given to us in the adjustments. That is because it takes information, new information into account that happened in the financial year that affected debtors. Then you're going to take the final provision that you calculated, subtract it from 2,781,150. It will give you a net trade debtors of 2,614,281. Still on that 166,869, I am going to take that value and compare it to what I had in the trial balance from last year. In the trial balance, I've got 160,000, meaning that provision for bad debts from last year is going up. And we don't want provision to increase as it's a future estimate of bad debts. The increase is bad. So the increase is recognized as an expense. We find the difference between the two and we will recognize it as provision for bad debts. And that will be an expense in this under operating expenses in the statement of profit or loss. In the statement of profit or loss, let's go to our operating expenses. And I'm going to put in there, always show workings in bracket, provision for bad debts adjustments. That will be 166,869 minus 160,000. It'll give you 6,869. Last one. The business signed a contract with Always Safe Securities for guarding the premises. An annual premium of 32,400 for the period ended 31 July 2024 was paid on August the 1st, 2023. This is pretty much the same as insurance. The key dates will be the beginning of the year, the end of the year, as well as the 1st of August 2023, which is during the year, and the 31st of July 2024, which is outside the year. They only gave us the date, and I know that from August until Feb, those amounts are in our reporting period. But as I've said, it's 1, 2, 3, 4, 5, 6, 7. 7 months fall within the current financial year. But this insurance covered us from August until the 31st of July, which is 12 months. Of those 12 months, 7 fall within the current financial year, meaning that 5 fall outside the financial year. Now, this 32,400, was it included in the insurance expense? Did they say it was included? I don't think they said it was included. However, they implied that it was included because they said it was paid. And the insurance that we have in the pre-adjustment trial balance, as I've said, all expenses that appear in the pre-adjustment trial balance are expenses that we have paid. So we have paid that 75,000 and the 32,400 we also paid. So it is in that 75,000, even though they didn't specify it was included. By including the word paid means that it was included. So we have to take 5 months out. We don't care about the 7 months that have been included. Good. Kudos. That's great. However, we need to exclude the 5 months that fall outside the financial year. Firstly, we have to find them. And to find them, we're going to take that 32,400 times it by 5 over 12, because it's for 12 months. Please note that you divide by a whole. That was for 12 months. That's why we're dividing by 12. It'll give us 13,500. That 13,500, we are going to subtract it from our insurance amount. Which I already done. And that will be 17,500. And when you take Okay, something is not right here. It's 32,400 multiplied by 5 divided by 12. It gives me 13,500. Now, that 13,500, we are going to subtract it from our security expenses. And our securities expenses will give us 59,000. That 13,500 is a prepaid expense. It'll be recorded in trade and other receivables as prepaid expense. It creates an asset. A reduction of an expense creates an asset or reduces a liability. Here it creates an asset, which is prepaid expense. Add everything up. Your total trade and other receivables will be 2,658,781. Add all your expenses up, and you will get that 4,230,579. Take that and subtract it from your gross operating income. I think I've explained how I got these amounts in the previous video. Please check out the previous video. When you take your gross operating income minus your operating expenses, you will get your operating profit, which you will add with interest income and subtract interest expense to get your net profit. We have already done trade and other receivables. Let's go to trade and other payables. Add them up, and that's what you will get, 862,000. And that is it with respect to this specific question. I still have more. There's one that I took from, it's actually question 4. I took it from 2020 November. Oh, June 2021. Okay. It's DVE, May or June 2021. Obviously, I adjusted a couple of things so that it can best suit the grade 10s as well. This is meant for all grades. This is for all grades. Because you've got grade 12s that are like, I don't watch grade 10 content, but they fail grade 10 content. Um, you need to remind yourself of some of the things that you forgot. I have grade 12s that still say financial statements are difficult, but when they were in grade 10, they were getting 60, 70% in financial statements. That means they stopped practicing as I introduced new topics. And this is their chance to go back and remind themselves of what they forgot before they say they passed because they were self-studying and it was not taught. Yet they forgot it was taught in grade 10. It's very, very important to remember these things, guys, okay? Do not learn to forget, please. All right. So you're gonna use that to prepare this. I've already posted handouts and well, check the description for the link. Click on that link, it'll take you to the handout. You can download it, print it out, and complete it as you watch the video. As a matter of fact, you can download the whole handout and start from the first video and come with them as we go. until you get here, because this is just a build up. All right. I've done June 2021. I'll see what else I can do. Probably I'll do 2020 June or November 2020. We open tomorrow, so I don't know if I'll still have time. And I also need to make a video on June 2023. I think I only did question one, and I said I'll do question two once we reach 1,000 subscribers. And it is so close. The video is 2 weeks long, and it's already sitting at 900 and something views, not subscribers, views. Yes. So I'll have to make a video on that probably before the end of today because we opening tomorrow. Just to keep my promise. And that is it from me. Enjoy your counting, guys. Counting is a doing subject. The more you do, the more you understand, the more you become great in it. And that's the aim. Please don't forget to share, like, and subscribe. Let your friends know about this channel. It is the coolest channel ever. Okay? Like right now, we just spoke about the beef between Drake, Future, Lamar. Who else did I include in there? Cole, who returned goods. Yes. Right. I guess this was a restaurant. Beef served. Awesome.